Matrix Geo Solutions operates as a high precision specialist within the geospatial technology and engineering consultancy sectors, unique characterized by high entry barriers and specialized technical requirements. The current climate of rapid Indian infrastructure development spanning railways, highways, and mining, MSG's high tech low turnover methodology, LiDAR form of photogrammetry GIS serves as a significant strategic mode, while competitors often struggle with the scale and speed required for national level projects. MGSL has integrated advanced digital capture with traditional engineering insights to optimize project lifestyles and resource management. The company's competitive advantage is defined by its ability to supersede legacy surveying methods through its hybrid technology method. Differentiation is crucial for maintaining least turnover time industry. The traditional times methods manuals can rely on manual labor and terrestrial equipment. DGPS ETS often resulting in high turnaround times, lower data density, and human-induced precision variance. Advanced MGSL method LiDAR photogrammetry utilizes drone UAV photography, aerial LiDAR, and satellite imaging. This enables rapid data acquisition over vast terminals with millimeter level accuracy and significant reduced field time. The hybrid advantage by combining both deploying traditional GPS for ground control point while utilizing LiDAR for mass data capture. MGSL delivers high quality international standard datasets faster than service only firms. This operational leadership is characterized by leadership with 50 years of combined expertise. Founders Amit Sharma and Rahul Jain provide a balanced foundation. Sharma excels in space tech and human resources, while Mr. Jain specializes in leader technology and finance. These dual focuses on technical innovation and physical discipline. As part of the platform, the company's recent financial stage. MGSC is currently navigating a period of aggressive scaling. The company has achieved triple degree growth in profitability over a 3-year horizon. The recent results show a compression in operating margin. This is a strategic byproduct of the company's transition from a lean service model to a capital intensive asset managed backed consultancy growth. Sales at 40 crores was up 53%, operating margins was at 13 crores up 62%, net profit was at 10 crores was up 67%. The analytical narrative of margin is annual operating margins fell from 38 to 33%, while half-yearly margins dropped from 30 to 30.76 to 27%. A critical driver of this compression was a year rise in depreciation from 0 to 1 crore, signaling the commencement of heavy operations post-IPO, coupled with a tax burden that rose from 1 crore to 3 crore. The margin professed growth trends rather than operational weakness. As MGSL deploys its new fleet of drones and equipment, the shift towards the higher depreciation is expected to be offset by increased revenue throughout. This profit performance provides the necessary momentum to validate the massive influx of capital reflected in the balance sheet. The September 2025 public issue has radically altered MGSL's equity structure, capital transformed it into a high capitalized explosion in reserves and surplus has provided the company with a very formidable war chest for future expansion and technical acquisition. Share capital was 14 crores up 45, reserves and surplus were up 50 crores, it is for just 4 crores. Total equity liability was 76 crores, it is 21 crores. The statement of deviation, court part that about 40 crores remains unutilized and parked in public issue account. This represents an enormous strategic opportunity cost. 52% of the company's total assets are totally idle. However, the stated project objects for this capital are high yield purchase of new drains, about 6.5 crores, survey equipment and technology 8 crores, working capital requirement 15 crores, capital expenditure 2.7 crores, and general corporate purpose 7.4 crores. The eventual corporate conversion of this liquidity into highly revenue generated assets is the primary catalyst of this. For the next growth, like the massive cap buffer is also the company's primary defense as the current dynamics are observed in its cash flow management. MGSL's current cash profile reflects the analysis of high growth consultancy model dependent on government and large scale infrastructure. Profits are robust on an accurate basis. The company is experiencing significant working capital intensity. The operation cash flow for the half year ended September 35 was net cash used in operating was minus 4.2. More critical on annual basis, the company reported a net cash flow from operations of a negative 11 crore, free cash flow of negative 13 crore. The data surged to 23 crores and 23 points. Primary in the government consultancy service sector, payments circles are often lumpy, leading to significant paper profits that are yet to converted into cash. The cash flow to profit there is a big disconnect. It's at just 53%, red flag that necessitates closer monitoring of the debt condition. Debtor collection, liquidity, insolvency, despite the negative free cash flow, MGSL it requires an extremely solvent due to its IPL project. The company holds 40.87 crores in cash and cash equivalent against minimal long-term borrowings of only 1.7 crores. This strong balance sheet allows MGSL to absorb the working capital pressure of 23 crores and receivables without restoring to external debt, positioning the company to scale as soon as these cycles normalize. The company represents exactly the fundamental performance and market valuation. Company has maintained a net profit CAGR of 110% over the last 3 years. The company is trading at 52 look of 60 effectively 50% effective weight and a 42% discount to IPO price of 104. The key investment consideration for this company is the valuation gap, trading at a P of just 8.4. Company market is severely underpricing a company with triple growth, profit and very strong efficiency. Return on capital of 23%, return on capital employed 30%, capital deployment of 40.2 crores in unutilized facility to drones is a clear trigger for FY27. The risk profile, the primary risk for the negative cash flow minus 13 crore, the high trade risk and the high trade risk. Investment thesis on the management's ability to convert these receivables into cash. MGSL is a debt-free company with high growth tech play, currently valued as a distressed asset. The sheer volume of parked capital against a total asset base of 76.8 crores provides a sufficient margin. Once the debtor cycle stabilizes and the IPO proceeds are converted into active equity, MGSL is provided for a significant valuation rating. Thanks for watching the video. Please subscribe to YouTube channel. We get regular investment reports on listed companies almost on a daily basis. Please subscribe to channel to see these reports.